Hello, I'm David Chaston with 989, brought to you by interest.co.nz. This is where you get everything you need to know, with 90 seconds at 9 o'clock, with important news from China today. A few hours ago, China's central bank cut interest rates for the second time this year and the third time in 6 months, amid a continuing economic slowdown there. China's economy is still facing relatively big downward pressures. That's what the central bank said. It lowered its benchmark rate for one-year lending by 25 basis points to 5.1%, saying the move was aimed at boosting development. The cut has come after weaker than expected April trade and inflation data. In fact, with inflation at 1.5%, their new lower benchmark deposit rate of 2.25% is still showing a positive real return for Chinese savers. And in the detail, this cut came with more flexibility on what banks can actually pay depositors, a switch that could create a drag on how fast rates really fall. All may not be so rosy in India either. The Indian currency weakened to a 20-month low against the US dollar at the end of last week as foreign investors pulled funds out of the country. There is increasing concern that disappointing economic policy and rising oil prices could hurt growth in Asia's third largest economy. The Modi miracle is still just a wish. In the US, American job growth bounced back in April and their unemployment rate dropped to a 7-year low of 5.4%, suggesting underlying strength in their economy after a tepid first quarter, and that could keep alive prospects for a Fed rate hike later this year. In Europe, tomorrow night is a key point in the current Greek debt saga. The Greeks need to pay the IMF €770 million, and there are reports that the Greek government attempts to corral many Greek institutions to hand over their spare cash is facing stiff resistance. The Athens government itself does not have the funds, and whether it can come up with them will be a close-run thing. In the meantime, it is boosting their public payrolls. Across the Tasman, all eyes are on the next budget from the Australian federal government. One thing that will be closely watched there will be how they respond to profit shifting by multinational companies and whether they'll bring in any new measures to protect their tax base from international e-commerce, a Google tax if you like. New Zealand is very likely to follow any Australian initiatives. On Wednesday, the Reserve Bank of New Zealand will deliver its assessment of New Zealand's financial stability. In New York, the US Treasury 10-year benchmark gave up quite a bit of its gains and is now at 2.14%, and that is despite the relatively good employment data. Basically, the bond market's doubts about a 2015 rate hike have risen. The US oil price also fell and is now at $59 a barrel, while Brent crude was lower too at $65 a barrel in Friday's trading. Still surging supply is undermining price growth. The gold price is at $1,187 an ounce. The New Zealand dollar starts this week marginally higher at 74.9 US cents, lower against the Aussie at 94.2 Aussie cents and 66.8 Euro cents. The TWI5 is at 78.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.